James O'Loughlin, The Real Warren Buffett, Managing Capital, Leading People. Discover the mind of one of the greatest investors in history. The Real Warren Buffett, Managing Capital, Leading People by James O'Loughlin explores the thinking and strategies that have made Warren Buffett renowned for his incredible success. With insights from his relationship with longtime partner Charlie Munger, this book peels back the layers of Buffett's mentality, business strategies, investing principles, and the evolution of his perspective over the years. Dive into the fourth box of important and knowable knowledge, unravel Buffett's journey from cigar but investing to managing capital, and comprehend how the maestro continues to break the mold.
Warren Buffett's fourth box. Warren Buffett's approach to business is characterized by focusing only on the important and knowable box, which defines his margin of safety, his circle of competence, and the limitations of his strike zone. This strategy enables Buffett to meet the expectations of his shareholders and partners by operating according to the truths he holds self-evident. He disregards three other boxes: one that contains things that cannot be known and are unimportant, another with things that can be known but are not worth knowing, and the third with things that are important but cannot be known. By holding on to this principle, Buffett has the resolve to step away when prices deteriorate and embraces the loneliness of being logical, setting him apart from others in the market. He believes that the market may be efficient in the long run, but it is not always efficient, and it cannot be relied upon to provide a stock price equal to any given company's intrinsic value. This represents an evolution in his thinking, but Buffett's adherence to this approach has been a key driver of his success. Buffett's journey to success. Warren Buffett learned the ropes from his first mentor, Ben Graham, who valued stocks based on their assets, not their potential. Buffett followed Graham's cigar but investing strategy and became successful in the undervalued stock market of the 1950s and 60s. By age 26, Buffett had 3 partnerships and invested the cash flow from Dempster Mills in other companies. He ultimately sold his stake in Dempster and acquired Berkshire Hathaway, where he met his continuing partner, Charles Munger. Munger played a crucial role in Buffett's financial success. Transforming knowledge into competence. In the book, The Making of an American Capitalist, Warren Buffett's partnership with Charlie Munger is discussed. Munger's teachings often conflicted with those of Buffett's mentor, Benjamin Graham. Buffett's time in the textile business caused him to realize the importance of investing in areas of competence. He learned to stress test his knowledge and beliefs. Munger also emphasized the importance of strategic stillness and avoiding corporate mindsets that prioritize stockholder profit over the company's needs. They believed in waiting for opportunities rather than following a strategic plan that inhibits essential changes. Buffett regrets not closing Berkshire Mills sooner and adheres to Munger's advice to do nothing when there is nothing to do. The partnership between Munger and Buffett led to the realization that what matters most is how investors are motivated to act. Munger's impact on Buffett. How Charles Munger changed Buffett's approach to business. During the early days of Berkshire Hathaway, Charles Munger posed a question to Warren Buffett that would change his entire approach to business. Munger asked if Buffett was keeping the mills open because of his ego, cautioning him not to hold on to them simply because they may become profitable one day. Munger believed it was crucial for Buffett to gain first-hand knowledge of an unfamiliar industry before making any decisions. Munger inspired Buffett to construct mental models of scenarios based on his experiences and refer to them with confidence. Munger taught Buffett to approach decision-making by looking at each situation backward, inverting it. By considering the best way to ruin a company, Buffett could then contrast his plans and practices with that and see what not to do, and what to do. This rigorous self-evaluation and mental discipline allowed Buffett to realize that he could have been far more successful than he had been, despite making Dempster Mills and Berkshire Hathaway profitable. Munger also emphasized that intelligence was not enough, as information and experience were equally crucial. His counsel encouraged Buffett to broaden his view of business possibilities and begin working primarily as an allocator of capital rather than an entrepreneur. As a result of Munger's teachings, the businesses under Buffett's leadership were eventually able to generate an average of 15% profit per year. Munger's impact on Buffett cannot be understated, as he instilled in him a newfound approach to decision-making and a wider perspective of business possibilities. Investing lessons from Warren Buffett. Warren Buffett is known for his successful investment strategies, including his preference for good businesses at fair prices and his circle of competence approach. He believes in focusing on businesses that generate statistical backgrounds, offering low costs, managerial excellence, and assurance they can stand against any significant unknown events. Buffett prefers investing in things he can know and make a difference rather than what is beyond his scope. He learned the importance of subdividing the strike zone into the most productive areas and then swinging at fat pitches, meaning good opportunities with high odds of success. He believes in staying away from things he cannot know or that cannot make a difference. When he merged with General Re, he reduced exposure to risk-intensive equities by 20% without paying taxes and took advantage of the market tanking to purchase several new businesses for a total of around $10 billion. Despite losing half its value, Buffett and Munger embrace volatility and do not base their decisions on contagious emotion. Buffett's innovative solution. On September 11, 2001, the terrorist attacks presented a loss scenario that no one, not even insurance giant Warren Buffett, had anticipated. Despite the setback, Buffett saw an opportunity for his catastrophic insurance operations to dominate the market. To combat linear streams of earnings and the credit crunch of the time, Buffett created the world's first negative interest loan vehicle, called a SQUARS, in May 2002. He raised $400 million and in return, investors received a 3% yearly interest rate and a warrant to purchase Berkshire stock at a 15% discount after 5 years. The best part was that investors paid a 3.75% installment premium on the warrants annually, which benefited Berkshire. These innovative solutions showed that against all odds, Berkshire was a dominant force in the insurance market. Buffett's unconventional approach. Berkshire Hathaway's CEO, Warren Buffett, adopts an unconventional approach to running his company. Unlike most CEOs, he dismisses stock price comparisons, pays no dividends and chooses to keep the annual report as simple as possible. Buffett sees his investors as partners and does everything possible to make them comfortable, believing that investors buying and selling frequently indicate underlying problems with the company. He believes that a market-efficient economy would render him penniless and therefore values the input of his investors.
The Real Warren Buffett provides a comprehensive look into the life and mindset of the legendary investor, revealing how he has achieved unparalleled success and influence. The journey from cigar butt investing to becoming a capital allocator is testament to Buffett's ability to recognize the critical points in business and investing. The reader learns the value of identifying circles of competence, embracing strategic inaction, making decisions based on reliable assumptions, and seizing opportunities in volatile times. As Buffett's track record demonstrates, investing in good businesses at fair prices, focusing on long-term benefits, and treating partners, investors, with respect are the key principles that have shaped his career. Understand the very essence of the Berkshire Hathaway investment philosophy and delve into the unparalleled mind of a true business visionary.